panel. Hilda received her bachelor's in environmental design from the University of Puerto Rico and her master's in architecture from Harvard University Graduate School of Design. And Hilda is a proud member of the Harvard Club of Dallas. Our second panelist is Tom Beecham. Tom is a founding partner of Surge Private Equity LLC, a Dallas-based firm he founded in 2017 that seeks majority buyouts of small businesses. So Tom is representing the expertise area of what if I'm interested in buying in as a passive investor to a small business. Tom received a Bachelor of Business Administration and a Master's of Accountancy from Baylor University, and he's also a CPA. Our third panelist hopefully will be able to join us, but sometimes things happen and people can't, is Gilbert Aranza. Gilbert's president and CEO of Star Concessions that owns and operates food and beverage and retail concessions at airports, primarily Dallas Love Field and Dallas Fort Worth International Airport. And Gilbert has a BBA in accounting from the University of Texas of Austin and a JD from Harvard Law School. He's also a member of the Harvard Club. Our fourth illustrious panelist is Nolan Duck. Dr. Nolan Duck is founder and CEO of DBG Advisors in Richardson, Texas, which is an M&A advisory and business brokerage firm. He's also president of a Dallas-Fort Worth chapter of the Texas Association of Business Brokers. And Nolan is going to be able to give us input with regard to what is involved in finding a business to buy, what are the issues associated with buying a small business. He also has extensive experience on the sell side of small businesses. Finally, Nolan has his BA from the University of Arkansas and a master's degree in theology and religious education and a doctorate in preaching, all from Southwestern Baptist Theological Seminary. So we're glad to have Nolan here. And our fifth panelist, Janice Charles. Janice is one of America's top franchise consultants who's helped thousands of people explore franchise opportunities. Janice comes from a franchise family. When I first met her, she told me how her parents owned a McDonald's franchise, and I believe were involved in introducing the Happy Meal. Janice has owned a number of franchises in the past and just a tremendous source of experience. Janice attended Colorado State University and actually lives in the state of Colorado right now. So those are our panelists. So with that, I'm going to turn it back to Rebecca, who I think had a intro survey.
Yes, okay, so we just have a couple quick questions to gauge everyone's level of experience in the group. So Stacy, if you could put up the first survey question. And for each one, just give you 10, 15 seconds, take a quick look. Do you have any experience investing in or owning a franchise? 5 seconds. Okay, Stacy, let's look at the results there. Okay, see, this was really interesting. Great, so only about 12% have had any experience in investing and owning a franchise. Great information. Let's go to the next question. Got it, Stacy? Good, 10, 15 seconds. Have you ever been a passive investor in a small business? That would be maybe less than 500 employees or $10 million in revenue. So been a passive investor, you put in money, but you weren't involved in actually running the business. So put in your vote and let's score it. Go ahead. Interesting, okay, half and half. So a little more experience there, actually, 58%, so more with yes than no. All right, let's move on to the next question, Stacy. Third question up, okay. Have you ever been an owner or part-time owner of a small business that you also worked at? So we're going from little less involvement but money in, and now actual you're an owner and you also help to work there, or you've also worked there. Yeah, okay, so more experience there. So clearly the area with the least experience is on franchises. All right, anyway, I think those are our 3 questions. So we can turn it back to Brian to start off the Q&A with our speakers today.
Great, thanks, Rebecca. So just so everyone is aware, what we're going to do is kind of cover the spectrum of business opportunity I talked about, with one question per speaker that focuses on their area of expertise. Then we're going to open up with 7 questions to the panel that multiple people can answer, and we should have about half an hour of time at the end for each of you to ask the panelists questions you might have on small business opportunity. So first of all, to start out, Hilda, if you could tell us, how did you decide to go into business for yourself, and what's the best thing about being in your own business versus what's the greatest challenge you've experienced? Oh, Hilda's on mute.
There we go. I would say that what motivated me to start on my own business, I have always had it as a dream, but never pictured myself having the capital or the comfort to get started until I was basically unemployed and was helping other people start their own businesses. And I saw then that if I am able to do this for other people, why I cannot do it for myself? And that's how I got started and began my own firm. And I think the biggest challenge has been to develop enough of a stability to keep my staff and avoid turnover. And I think the most rewarding thing has been to be able to focus on the work I want to do for the clients that sometimes choose me, but sometimes I pursue, and that I don't have to worry about corporate politics, just about serving my clients. And when it has to do about in-house stuff, it's easier to manage when you are the one that controls it than when you are just subject to it.
Great, well, thank you. So next, and I will mention everyone, even Tom, Janice, Nolan, as well as providing consulting to small businesses, they're also in their own small businesses like Hilda. So I'm going to follow up with Tom. So Tom, you deal with doing deals, buying out existing businesses and trying to raise capital and find investors. Could you explain your business model? How do you source deals with small business? How do you structure the deals? How do you work with outside passive investors?
Yeah, thank you. So I'll try to answer that in a quick manner. But yes, we started Surge a few years ago. We've done about $100 million worth of deals since we've closed. And what we focus on doing is primarily leverage buyouts of businesses that profit anywhere between $1.5 million to $5 million a year. And our business model is to take advantage of 2 different markets. One of them is just the business market itself, and that because there's less sophisticated buyers in this space because of the size, there are lower prices and there's more businesses to choose from as well. So the supply and demand shifts in your favor, kind of the smaller you go. And then 2, to take advantage of the credit markets. So there are, I think most people here are aware of what the SBA is, Small Business Administration. And when you buy a small business, you can get an SBA loan. Now, those are personally guaranteed, which means if your investment were to fail, the government wants you personally to pay it back. We focus on a subset of that called the SBIC funds, which is supported heavily by both Democrats and Republicans, and it's been around for quite a while now, where there's a lot of these credit funds that will do non-recourse loans to professionals like us. Non-recourse meaning if we invest in a company and we borrow most of the money to do it, if that investment were to, God forbid, fail, we wouldn't have to pay back the lender. They would just, their only collateral is the company itself. And so by combining the ability to pay a very low price relative to the profits of the business with being able to borrow the majority of the cash you actually have to pay for it and not be responsible to pay that money back if that investment were to fail, you would only lose your invested equity. And it's a very attractive investment opportunity. And so our business model was and is to find those opportunities at pretty safe, stable companies, ones that have recurring revenue or diverse customer base or some sort of proprietary product, and then go to the credit markets and professionally run a credit process. And then as far as our passive investors, it's attractive for them because they can, without having to deal with all the headaches of running the business, invest anywhere from 50 grand on the low ends to $1 million or a little more than that in one of our deals, and read about the deal before they do it, rather than if they were investing in like a fund where they're really picking the people and don't really know what kind of deals they're going to pick. And so it's nice for them. They can see different deals we have, read about the companies. If they really like it, they can choose to do it and participate. And then we kind of make each company we invest in, we hire a CEO that runs it, and Surge itself operates more from like a CFO / board of directors level on each deal, monitoring and facilitating new transactions. And from there, we try to grow each of our companies, doing add-on acquisitions, organic growth, the like. That's kind of the high level, very quick explanation I can give you, but certainly I've given explanations like that 10 times more in depth than this.
Great, well, thanks. And we're gonna have more time to go more in depth a little bit later, but that's very helpful. Next, Janice, world-renowned franchise expert. Could you describe the consulting work you do and some general considerations you give to people considering going into a franchise business? What are the pros and cons?
Absolutely. And Brian, thank you. I'm really humbled with the opportunity to be able to talk with everyone about franchising. And franchising really is my passion in life. And I think sometimes when people look for a franchise, it can kind of be so much looking for a needle in a haystack unless you know what you're looking for. There's over 3,000 franchises available. So knowing where and how to start, I think sometimes can be a little overwhelming. So this is where we come in to really get to know people, similar to how a realtor would. Really understand what people are trying to accomplish. What do they want to invest? What kind of return? Where do they want it located? What kind of employees? Retail, non-retail, what have you. And then once we have that information, we go out and find the best opportunities for you. And we're going to take a look at them and say, hey, what do you think? Our services are complementary, again, similar to a realtor. However, we differ from a realtor in that you're going to pay the same amount for a franchise if you work with us or if you work with a franchisor directly. So people have 40 years of experience behind them and by their side to help them through the process. We really help people to save a lot of time and money in looking for a franchise and really make the best decision for them, because it's really all about who they are and what are they trying to accomplish with this business. From there, we're going to dig in and find, everything that's available. And we want them to ask any and all questions they want to make whatever the decision it is that they want to make. It typically takes probably 2 to 3 months to get people through the process to have offers in front of you. If they were to do it on their own, it would probably be a year or two. And then we're by their side the entire time and make sure that they feel confident that they've had the time to research, plan, and evaluate these businesses. The neat thing is that I'm not selling anything. I'm simply a franchise resource to help people investigate businesses on their own time frame and on their own terms. So I think a couple pros to franchising: when you're looking at a proven system and support, you are buying a process. What I tell people is you're buying a process, but you're not buying sales. And I think that there's a big difference there. And I think it's important that people understand that. From my perspective, since I'm a franchising person, franchising, I believe, is much lower risk. You obviously have a lot of brand recognition, you have speed of growth, advertising and promotion, you co-opt those together. You also co-opt the buying power. of groups, and you're not out there on your own island trying to buy and advertise. You can literally hit the ground running. So those are some pros. I think some cons, and sometimes I think cons are pros, is the way that I like to look at them. But I think, you know, you enter into a formal agreement with someone. Do you really want to be married to these people for 7 to 10 years? And that's what I ask people, is after they make a final decision, do I want to do this? It's like, do you really like these people? Do you really want to do business with them? And that's one of the things that we really dig into. You know, potentially there can be some restrictions. Some are more restrictive than others, but then it's also an opportunity to grow with the company. So hopefully that answered your.
It did. We're going to even get deeper in the next set of questions, so I appreciate it. And last but not least, Nolan, what's the nature of your business broker work?
I'm turning my camera on, guys.
What do you do with small businesses, and what high-level words to the wise do you have for people looking to purchase a small business?
Well, Brian, thank you for having me on this panel. I appreciate it greatly, and I'm looking forward to getting to know many of you that are on this screen in front of me. I typically work with business owners to help them to evaluate their readiness to sell their company. I do this through a ready-to-sell discovery process. I provide them with a broker opinion of value and ask them to complete a value builder assessment to objectively determine how sellable their company really is at this moment. Many business owners believe that they're ready to sell because they haven't taken the time to look at their business objectively, as a buyer would look at it. If they aren't ready, then I help them to get ready, and then at the right time to help to take them to market to sell their company. I'm a certified value builder and an EOS implementer, and use those tools to help my clients build value in their companies. I also do buy-side representation for buyers who are looking for a company, and to help them to locate companies, to evaluate those companies, to negotiate the deal points and the structure, and then ultimately to purchase the target company that they're looking at. In my experience, it is wise to buy an existing company. I think that's one of the things that I like about the franchise model as well. There's a business that's already running. And to buy an existing company that is in an industry you understand, it's better to buy that existing company that you understand than to launch a startup, possibly even in the same industry. This is because the first years of any startup are difficult years, and as we know, many companies never make it out of infancy for a number of reasons. Now, you need to find a company, if you're looking for a company to purchase, a company that you understand, it fits your skill set. It's in an industry that you know, that you have experience with. It has a management team or employees that you that really know what they're doing and that you can give additional responsibility to as you grow that company. It doesn't, a company that in the purchase of it doesn't strap you financially. It's worth the risk. You've evaluated that, you've looked at it and determined that it's worth that risk, and has potential for significant growth. If all of these factors line up, then you do well to purchase an existing company. I look at myself something like a matchmaker. I'm trying to help people who are looking to buy companies to find and then purchase companies that are wanting to sell. So I'm passionate about that and love to work with people, love people, and enjoy what I do. So that's basically how I work.
Great overview. So I think everyone can tell based on these 4 responses. We have, the ability, people can go into business on their own, such as Hilda. You can make passive investments, as Tom described. You can enter via franchise with a proven business model, or you can actually look at buying a business. So what we want to do is dig into these 4 areas, and then we'll open it up to questions from a group. So the first question I'm going to ask the panel is, I'm interested in being a passive small business investor. I might have $50,000, $100,000, $500,000. what are my options for investing as a passive investor, and what are typical structures? So maybe Tom, you want to start out answering that question?
Yeah, sure. Yeah, so there are some group, so on the low end, on like, you know, the $50,000 to $100,000 range, there's only a handful that are kind of like us that you could look at investing privately in a deal, because a lot of them have like minimums that are higher than that. But what that looks like is the way Surge works is when we close a deal, you know, we get paid an amount of money from that specific company every year. And so we kind of charge fees like that. And then there's like a success one in the end if people get back a substantial amount of return on their investment. The way it looks and why the small business industry is so powerful to invest in is because fundamentally the price of these companies are, I would say, 80% cheaper relative to their profits than publicly traded ones, is that while you want them to grow and you try to have them grow, you have this margin of safety just from buying it so cheaply that even if it doesn't grow, just from doing dividends or paying down debt, if you pay, let's say, 1 year's worth of profit a company has, if you only pay 4 years worth for that, so the profit's $1 million and you pay $4 million for it, even if you fail to grow it, you can issue a dividend and basically be making 25% returns per year. And so, you know, those are the type of dynamics that we try to achieve, except a little higher than that, because we also try to borrow. So of that 4 million under this example, you know, we would try to borrow 3 million of it. And so in that instance, once you've paid down the debt, you know, you could be looking at getting 100% back. Now it takes like 5 years to have paid down that debt because it has interest. But that's kind of what we try to do, is try to find opportunities where we you know, see a powerful ways to grow it organically and doing add-on acquisitions. But you know, as we tell our investors, that even if you fail to grow it, you can make great returns just from dividends, as well as because the returns are so high, you have a greater ability to stomach, well, to take risk, I would say. So like if you did multiple deals and one were to, God forbid, fail, if you made so much of the other two because you bought it for such a low price, then it still makes the overall investment and multiple of them better than, let's say, in the overall market. And I think that's primarily why the multiples are so much lower in this space and why there's so much opportunity. As far as passive investors, you know, they can call us anytime, and you know, they get like monthly, quarterly updates on how deals are going. Yeah, that's the short answer of it.
Okay, Nolan, do you want to comment?
Well, in most of the deals that I'm working on, it is more of a 100% purchase rather than leveraged buyout. My owners are looking to, what they want to do is ride off into the sunset. That doesn't really ever happen in a short amount of time. They eventually get there. But at the same time, we don't have opportunities where someone can invest $50,000 and participate in a company.
Okay. Dennis, in terms of franchises, do you know, people want to set up a franchise ever take passive investors?
I think that they do, and it's a great question, Brian, in that with franchising, you really have three basic models. You have an owner-operator model, you have a semi-absentee, and then a 100% absentee model. I think the absentee models are probably fewer, probably the lowest category as far as availability. However, there's always people that are looking for investors. If you have someone that's like, you know, I want to grow my business, I have the knowledge, I have the know-how, I have the drive and the passion, I just need more capital. We work with clients that are always looking for investors. The way that we look at it is you really have two things, time and money. As one goes up, the other goes down. And I know my hands are disappearing, but, but really, you know, the more time you put in, the less money in that business you have to spend, and vice versa. But then it also depends upon what kind of scale. How do you want to scale that business? What makes sense to you? So it's kind of a loaded question. It really depends upon the individual and their business goals, and we can find those opportunities for about anyone.
Okay, great. Rebecca, do you want to ask a chat board question? Since we're getting a lot of questions on the chat board.
Yeah, sure. Okay, so we have a question from Steph Mauler, and I'm sorry if I mispronounced your name. What are the biggest pitfalls in purchasing a business or franchise? Any risks that may not seem obvious?
Well, I'll start this, Janice. One of the biggest pitfalls is not doing their due diligence effectively, not really seeing what's there. Reading financials, digging down. A lot of times when I'm representing the seller, they don't want to tell me the mistakes they've made. They don't want to tell me the skeletons in the closet. I eventually find them or hear about them. So I try to get to them as quickly as I can. But sometimes businesses are sold without someone doing that kind of due diligence. And what they do is they'll buy a company that's failing and they don't know it. And they buy a company that's just going down so quickly that there's no way they could turn it around. So that's a pitfall. That's something that you need to avoid. What about you, Dan?
Yeah, I could add to that. Yeah, absolutely. Like all of our, all the deals, especially that we do, we always do like hire a third-party accounting firm, like a large one, to do a full quality of earnings diligence report. Sometimes owners don't even know because they don't know accounting very well. They think they're making a certain amount of money, and then they're actually surprised too that they didn't make as much as they told you. And so, definitely doing diligence. Another thing is one big risk that is hard to gauge is what kind of relationships the seller, if they're running the business, has with key customers. And that's not really something you can fully get comfortable with other than investing in a business that has a diverse customer base rather than concentrated customers. But, we also usually always buy 80% of a business rather than 100, so that the seller still has skin in the game and something to lose if they were to, not let that relationship do well to go on. So I would say customer relationships and diligence. And, if it's not an industry that you have experience in, having powerful advisors in that space that can tell you, what's going on in that space. Because sometimes the industry is seeking a change that you don't know about, even from Googling. And so those are kind of some of the major pitfalls, I would say.
Great. I noticed Gilbert just joined us. Gilbert, can you hear me? Is Gilbert able to speak? Oh, there he is. Hi, Gilbert. How are you? Looks like your mute is on.
He's trying to get off mute, I think. I see that.
Great.
There we go.
Hear you. Gilbert, thank you for joining the panel.
Sorry I'm late. I have a daughter in remote schooling, and there was an issue.
Totally understandable. And I've missed more meetings in this COVID era than I can tell you. So Gilbert, maybe you could tell the folks on the meeting what franchises you're currently in. How did you decide to get into the franchise business? Do you think the franchise business is a good business to be in?
It's a long story. I'll make it short. I was a lawyer in a big law firm. I was not happy with the ethics of lawyers, at least even in the big firms. And I decided that the time I was happiest was when I was working as a nighttime janitor at the Dobbs House in Houston Intercontinental Airport when it opened in 1969. And I decided that I should be in the restaurant business. And so I started my own restaurant group while I remained a partner in the law firm, and did that for 10 years, developed my own brands. I developed J. Pepe's Mexican Restaurants and Cantinas in 1983. And I made a decision after 10 years that I was viewed as a good operator, but I did not like having all of the responsibility of developing menus, locating sites, having competition move in within a year or two of picking a really good site. And I decided it was best for me to use my operating expertise to execute somebody else's brands. And I wanted to be in an environment where there was limited real estate, where I could assure myself of some exclusivity so I didn't worry about competitors. and I made the decision to go after restaurant spaces in airports. And I was fortunate to win all of Dallas Love Field Food and Beverage in 1994. And as a lawyer, I represented PepsiCo and Norman Brinker with Brinker. And so I had access to a number of brands that put me in a position to compete with the big boys in the airport concession business.
Great answer.
And
Wow.
One of the questions I'm going to ask you and the panel, a couple people have asked it, is, you know, the recent COVID crisis has really, while some small businesses have benefited, the vast majority have been significantly hurt. So the question is now a good time to look at getting into small business, you know, assuming that there's some type of recovery? And if I was interested in that, if I'm a believer in that, what would the first steps be for me to look at small business opportunities, you know, that I might want to execute on a year from now in the Dallas area?
well, any small business that relied on personal service, restaurants being one, hair salons, nail salons being others, there's going to be, in my opinion, there's going to be an overflow in the market. Even in my environment in airports, there are operators that, some of them multi-billion-dollar companies, a lot of them smaller than me, that are struggling and may not reopen. And so as much as I think restaurants are not the place to be today, certainly not full-service dining, my Whataburgers, for example, because of the ability to do drive-through and takeout, are not suffering as much as my full-service concepts. But there will be a lot of restaurant and personal service business spaces available. It's who has the money to get into those spaces and wait it out. And I'm hoping that I'm one of those.
Great. Yep, absolutely. We hope so too. So maybe Tom, Nolan, the rest of the panel, you know, what do you think if someone is interested in a small business investment opportunity over the next year here in Dallas, how can they find one? Maybe you could comment.
Well, yeah, I would say as far as investing during COVID, a couple things. One is everything has a price. So we closed a month ago on a homeschool curriculum publisher that sells homeschooling supplies. And I mean, they're just sold out of everything all the time. And we have companies we invested in that have been crushed by coronavirus, but as long as the business model is strong, you know, and people believe it's a temporary setback, you know, then they can weather the storm and recover. As far as new investments and looking at new opportunities, we have a deal we're looking at right now that has been significantly negatively impacted by coronavirus. And the reason that we're looking at it is because of the price. So, you know, it just depends on the deal. And I mean, we're kind of more scared about buying a company that's benefited too much from COVID than we are one that's been negatively impacted, because, you know, the opposite could happen where it's been possibly benefited and then it just goes back down when things kind of go back to normal. So it all kind of depends as far as investing in an established business. And there's certainly a lot of opportunities out there. There's a lot of companies that are benefiting a lot that have posted ads online to be for sale all of a sudden that we're seeing all over the place. And we're actually not seeing that many not too many distressed opportunities being posted. We're seeing more people that are benefited a lot trying to sell their business and take advantage of selling high.
It depends on what kind of company you're looking for. I've got 7 companies that I'm representing right now that are selling, and several of them have not been impacted at all by COVID. Others have, but not significantly. You'd be surprised at how resilient business owners can be and how innovative they can be as they're faced with things like COVID virus, which is, nobody saw that coming. One of the companies that I have is a manufacturing company, and they closed down for 3 months, but they have a lot of pent-up demand that is going to explode once they really go back full steam. So that's a great company. I have it almost sold. So That's great. And then several others that are in the queue that are moving in the direction of a close. But it really all depends on what's going on. Most of the companies that I'm seeing, some and put the brakes on because of either COVID or the oil and gas industry has taken a hit. I had two companies in West Texas that put the brakes on because their particular industry was hit pretty significantly. They're going to come back. There's no question about it. But for right now, they're not going to sell, and that's fine. But you just have to wait and see what is available, and timing is a really important factor in purchasing a company.
Okay, Janice, do you want to comment from a franchise perspective?
Yeah, I think that we've got people brought up some really good points. What we're experiencing is the exact opposite. We are selling more franchises than we ever have. Our franchisors are busier than they've ever been. We're realizing a different kind of buyer, people that understand to buy and what kind of franchise to buy. Obviously, retail and what we'll call as sophisticated retail are not where people are buying. Where people are buying are in the home service brands, the B2B brands. And it's interesting because nobody knew how things were going to respond and how people would be responding. But we've been busier than ever. And I think that a lot of people are looking for these fire sales. They're thinking, oh my gosh, all these people are going out of business. Where are all these businesses for sale? And I think when you look in this type of environment, you're going to find fewer in the franchising sector versus the individual sector because you have the power of a franchisor behind you, which I think obviously is a pro of franchising. But it's interesting, but we're seeing the exact opposite, but just it's a shift, a very substantial shift in who's buying and what they're buying.
We have a couple of related questions here that I think fall into one category. There are questions about if our panelists can give some specific examples of companies that have not been doing well versus companies that they're bullish on. So maybe a little more specificity. There was specific questions, for example, about technology as well as healthcare companies. I think people are looking for some specific examples of companies just to get a better grip on what we're talking about in terms of big trends. And then a couple questions about, okay, how do you get information about these companies? Where do you see, are there lists out there? How do you find that information? So
yeah, I can kind of take it firstly this. So first of all, there are websites like bizbuysell.com and BizQuest that have 100,000 business listings, and over 90% of them are crap. But if you go spend the time to kind of filter through, and they have filtering systems that you can use, but there's a lot of companies that you can see for sale there, and a lot of them are on the much smaller ends. But we've bought companies that we found put on there. In fact, we kind of like to buy companies on there because that means that the seller didn't really know what they were doing and posted an ad on the internet rather than hired somebody like Nolan to help them sell for a good price. So yeah, that's actually the best for us, is if they post like a one-page ad on the internet. As far as technology, our firm doesn't look at technology, even though it's a good trade overall, just because it's expensive. So it doesn't fit with our model as far as paying a multiple of profits and kind of, having a safer investment because you're paying a lower price. So we don't do tech. A lot of times it's either a very high multiple or it's trading off of how much sales it has, and it doesn't even profit any money. As far as your question around specific examples, so we've closed 10 deals, 2 of ours that have been hurt the hardest by coronavirus. One of them hosts corporate training. So imagine like they sign a lease for a huge space, and then it's all subdivided, and then companies will have their CPA training courses in there, or a refresher update, or they'll have a board meeting, or they'll have a banquet. And so the businesses that have been hit the hardest by COVID, are the ones with the most fixed costs, because we have another business that's been significantly negatively impacted on the revenue side, but it doesn't have a lot of fixed costs, so it just kind of sits there and waits around. And that business does laundry for 4- and 5-star hotels in Manhattan. And so, when you look at that business, very, very safe investment going into it, as far as the average customer has been a customer for 10 years. And it just, your customers pay you the same revenue every day, and it's just constant. And you look in a recessionary time period, a business like that, while the price of hotel rooms in Manhattan will go down in a recession, the occupancy stays about the same, because hotels will just cut prices because the name of the game for hotels is to keep occupancy up. Well, a company that specifically only does laundry sheets only cares about hotel occupancy, not the price of the room. And so, from a recession-proof or recession-resistant investment that was attractive, we looked at what happens even in a really bad situation like 9/11. And September 11th happens, hotel occupancy dropped from, it's usually about 90% there, to 50%. So that was kind of our like black swan case. It's currently at about like 5%. So, I mean, just it never happened before. Revenue goes down 94%. But it's temporary. I mean, it's now started to come back. A lot of that's been hurt also by the governor's, just basically bans travel. So anybody coming in has to quarantine for 14 weeks, which effectively makes nobody want to go to New York. So those are some specific examples of companies that have been negatively impacted by it. And then, of course, we have the homeschool curriculum one that's been extremely positively impacted by it. A lot of biz, buy, sell companies are. So I was reading some of the questions. Tom mentioned, bizbuysell.com, bizquest.com. Yeah, they have different filters for industries. It'll take a little bit to get used to, but there's a lot of companies on there for sale, all across a variety of different industries. And
maybe Nolan, do you have any? Do you have thoughts on that last question?
Absolutely. There's all that Tom has said is absolutely correct as far as listings that you can find. I have companies that I don't put on the internet at all, and so I have a group of people that are interested in buying companies, and they reach out to me, and I will give them teasers or talk to them, and we sign the NDA, and we can talk about the different companies that I have for sale. Of the 9 companies, I miscounted. Of the 9 companies that I have for sale, 7 of them are not affected at all by COVID, and they are in the process of being sold. So we're not being hurt by the COVID, at least the companies that I represent on the main. One company that's really amazing, it's an assisted living company, and you would think that they would be negatively impacted, but they're not. They've just continued to work right along. They've been very careful, done a good job. They have a great reputation, have several different buyers. I've had 50 buyers look at that deal. 3 of them are very interested in wanting to move forward. So it's kind of a deal where it all depends on getting the word out, finding the right deal, one that fits you. The things that I mentioned in my introduction are the things that people need to be thinking about. And I'd be happy to visit with anyone who's looking for a deal. And if I have something or if I know of something, I'd be glad to help someone.
Janice?
You had something to say about the number of opportunities in the franchise area you're aware of?
We do. With the franchisors that we work with, we have over 700 franchise resales on myfranchiseresale.com. And I'm happy to talk with anybody about those. But there's plenty of them. They're all around the country, and some pretty amazing opportunities on there. I think sometimes with resales, you get what you pay for. And that's where the due diligence comes in that Nolan and Tom talked about. I think with regards to recession-proof businesses, you have senior care, you have the remediation business. People are going to have water damage, they're going to have fire, no matter what happens with the recession. Senior care is another one. You're always going to need Roto-Rooter, you're always, things like that. So, and also medical. We're finding medical is really kicking into gear. And we've got some new medical options that are very, very popular. So Obviously, I think with the change in the potential change with any kind of healthcare in the future, the medical options I think are going to be pretty amazing.
You know, one question I want to ask Gilbert and yourself, Janice, is for someone that wants to get into a franchise, wants to be an owner operator, what type of capital would they need to have to be able to turn that into a reality? You know, 100,000, 300,000, million, 2 million, because people on this call, you know, are like the entire spectrum in terms of resource.
So I can tell you that in my environment in the airport, the minimum capital needed for a food and beverage unit, whether it's a quick service or a full service, is going to run anywhere from 1.5 million to 2.5 million to open a unit. If any of you are traveling through Love Field in the next few weeks, I'll be opening a Maggiano's there, and that Maggiano's is 1,750 square feet, and its all-in cost to me are about 2.1 million. There's also a Dallas Cowboys sports bar that I'll be opening in the near future at Love Field, and that's a little over $1 million to establish that unit. So in my environment, it's expensive to get into the environment. Obtaining a franchise from a brand like Chili's or Starbucks or Brinker with Maggiano's, if you're viewed as a good operator, it's not a hard process. Their fees are not exorbitant in any measure, and they are incredibly helpful to make sure that I'm successful in the environment that I'm in.
Great. Janice, what about the lower end? Someone that wants to open up a Sylvan Learning Center or a trash compacting service. What type of investment?
I think it really goes back to who you are and what you're trying to accomplish. We can list different names of businesses on an ongoing basis. I think the minimum liquidity that you need is around 50,000. That's going to be for a home service-based franchise. If you're looking into food, you're going to be higher, just like Gilbert mentioned. So I think that, again, you get what you pay for. But minimum, what we tell people is a minimum liquidity of 50,000 and a net worth of 200,000. We can help with any kind of franchise lending that people need to help them based on their net worth. So again, retail versus non-retail, there's just really a big difference.
There's a lot of questions coming in and out of our chat group, and I'll say if all of our, a lot of people have asked how to get in contact with our panelists today. We will send out contact information, but if our panelists want to take a moment and maybe type in where they would like to be contacted, then people can take note of that now. There's another interesting questions about some particular areas of businesses that we haven't really talked about, trades, HVAC, plumbing, remodeling, housing, construction related. Anyone have experience with those kinds of businesses, and what is your opinion on the investment opportunities there?
I'd like to say something about that.
Yes.
Well, first of all, I want to say that COVID-19 for us has been a curse and a blessing. It gave us the opportunity to get more capital, but we were kind of like strangulated for 2 weeks in the design funnel in terms of getting work, but we had jobs under construction regardless that we had to finish. And then on the design side, I got actually my largest commission that I have had in 10 years of business in June. And they started talking to me in March during the lockdown, actually. So, and it's for a hotel in LA that I'm designing right now. So the way they got part of their capital was actually COVID related. And I think that was kind of like their kick to get on, and it became an opportunity. And you would think, who would be designing a hotel in the middle of this crisis? And it just happened the other way around. then going back to the part about what I think makes a business be more attractive, and how at least I am trying to make it more attractive, is trying to do this funnel where I want to be the innovator. So usually you have a funnel that is like this, where you have on the top what everybody is selling and delivery, but that's not enough to satisfy a client. So to get a client to that point is where you are bringing them reliability, safety. You are doing, you defend your client, you become part of them, and you innovate. You do things that are really unique to them. So when you do that, I think not only to sell your product, but also to operate, and you analyze everything you do in your operation, and you have that kind of structure, very clear-minded as an owner of a business, you start, that transpires to the outside. And I think that's one of the keys that have made some owners be more successful than others in the market for sale and to get repeated business, like a Gilbert or like you know, any franchisee that has all these multiple concessions. And I've seen also that, for example, in the design industry, where I used to work, in one of the firms I used to work, the owner, when she turned 65, she decided, I need to prepare. But she had been preparing for 10 years before that, making sure everything was ready. She didn't wait until she had her exit plan. So she just was at the point of just looking for the investor, the right investor. And she did it in phases. And she did first 50%. And then after basically another 3 or 4 years, she did the rest of the other 50%. So she sold her company, which was a small design firm, for $30 million. And I thought that was fantastic. And she has offices in, well, had, because she's no longer the owner, you know, in China, 4 cities in the US, and in Europe. And they now, with the new investors, expand even more so through more countries. So it's not, I think the point is that we need to be able to position yourself in a way for growth and try to prepare yourself ahead of time and not wait till the moment you want to sell to be able to be in that position.
Amen, sister.
Very helpful. Let's see, Graham Gardner had asked a question of you, Tom. How are your private equity investments structured?
The LP.
Yeah, we charge basically each company. So we charge fees to the company on an annual basis. It's on average about 175 grand per company per year that we charge. And it's regardless of what the size of the equity check is, but it's relative to each company we invest in usually has around $2 to $5 million of profits a year. And you know, to the extent the company were to decline, just the lenders that we have on each deal, like basically block it as well. So it doesn't always go unless things are going well. But second is whenever things, in the end, when we exit, usually, I think you asked specifically about like hurdles and carried interest. Usually it's a 10% hurdle and 25% carried interest. As a percentage, these deals are smaller. So, you know, the dollars are smaller, but the yield's a lot higher because the multiple you pay in the company is a lot smaller. So, you know, when you're paying 5 times for a company, it's a lot more lucrative than if you're paying 10 times and you're paying carried interest on a 10 times deal like in the middle market.
Okay, I think, do you have a front end load for investors?
Usually we charge a transaction fee of around 200 grand at closing, but if a deal that people sign up for dies before closing, which has happened, we have to pay all of the lawyers and accountants ourselves, which is usually around 200 grand as well. So, you know, some of that transaction fee is is paying for losses on deals, or when we look at a deal and we do diligence and we find out, which I would say half the time we find out that a big problem, or we find out their numbers are not quite there, and we kill the deal. In those situations, we pay for those costs at Surge, not the investors, because we do deal by deal. So an investor doesn't enter until it actually closes. So if it doesn't get to that point, we pay for all of those diligence and deal sourcing expenses.
Okay. Rebecca, let's see, what other questions do we have on the chat room?
Well, there's a great discussion here about hotels. I see a lot of back and forth on the hotel industry. And Rose here has a lot of experience. So if you guys look at the chat group, Rose, do you want to just take a moment and take a minute and explain what business you're in, or which business you own?
Sure, absolutely. So I decided to quit my corporate life 5 years ago and decided to get into hotels, and bought my first property 5 years ago. So I have a couple other properties in partnership, but the jewel in my crown is my Holiday Inn Express. It's actually in Louisiana. I have no partners, and it's an IG franchise. So I'm very familiar with the pros and cons of having a franchise property. And yes, I think the asset class that has been most negatively impacted besides retail and office space is hotels. If you look at the statistics right now, 1 in 4 hotels are filing Chapter 11 because of COVID. So it's rough. They're predicting that an uptick in business will probably come around 2022 for the sector itself. And a lot of this is due to the CMBS market that crashed. So I think, in general, bad news right now, but long term, since every business is cyclical, the hotel industry will be okay. It's all about location, location, location in the hotel industry. So my hotel is 68 keys, and it's located in a small town in Louisiana, oil and gas town. So I got a double whammy because of oil and gas being down and then COVID. But then Hurricane Laura came along, so I'm 20 miles away from where the hurricane hit. So now we're sold out for 3 months, all rooms. Like, I have a waiting list. So it's just, every day is different. I do recommend the hotel business as long as you are in a good location.
And we may have a follow-up session on hotels. You'll see that's in our survey if there's interest. One of the questions I want to ask the panel is, if I'm looking at buying a business or starting a franchise, what type of financing would be available? Do I need that $1 million in cash in my bank account, or can I get loans?
Let me start, because this is a conversation I have with every buyer that I talk to. And you have 7A acquisition loans from SBA. You also have 504 real estate loans. And typically what you're told when you're the buyer is that if you can come up with 10% as a down payment, then you would be able to buy a existing business. I'm sure that's something similar. I don't know if that's true or not with Dennis, but that is what you're being told by most bankers. It's really more complicated than that. You need more, and often what happens is the seller is asked to carry a 10 or 15% seller note. The bank is wanting to keep, some skin in the game from the seller, and that is a little bit of a hard pill to swallow for some. But it's not all that bad, especially if the buyer has been vetted effectively. But that's where you start, is 10 to all the way up to 25% of whatever the sales price is. That's what you're looking at covering one way or another.
I think that, from a franchising perspective, we're finding a lot of people are rolling 401ks to borrow against themselves to minimize the investment, because that's really one of our goals, is to have people pay as little as possible for business. But we're also seeing a lot of SBA loans, but the SBA loans are taking twice as long right now. And you need 20 to 30%, depending upon the franchisor. The Federal Trade Commission has mandated that anybody in the SBA that wants to provide SBA financing be registered with the SBA. So it's really going to depend upon the business. But in franchising, you really need 25 to 30%.
Yeah, I'll answer that to just add on here. That's why all the stuff they're mentioning is why we our kind of minimum EBITDA size for a company, which by EBITDA I just mean like the profits of the company, is around 1.5 million, because once you get over 1.5 million, you get to a size where you can borrow without personal guarantees. So all the types of loans they're talking about, you know, if the business goes bad, you have to pay that back personally. They'll come look for you to pay for it. And when you're evaluating an investment from a perspective of you are truly paying for that, if you have it on recourse versus if it's non-recourse, you know, you can evaluate the asset class itself of equity rather than the entire purchase price. I'll give you an exaggeration. If a company is worth $10 million, but somebody will sell it to me for $20 million and I only have to pay $1 in equity and I'll just like owe the rest of it to them over time, I would do that. And so that sounds kind of like I'm paying double, but it's because there's like an option value to equity at some point, similar to buying an out of the money call option on the stock market. If it's an out of the money call option, you're paying a price for the stock that it's not at today, but that's because, you know, the risk reward is there. And so when it comes to financing over the, you know, when you get to the 1.5 to 5 million, you can borrow non-recourse from a bank. Then you can do what Nolan's talking about as well, where you can, you know, have the seller finance some as well, and they'll even agree to subordinate themselves to that senior lender. They'll agree to, you know, take some equity, you know, retain some equity sometimes. They'll take contingent payments as another form of financing that I don't think anybody mentioned yet, which is you say, hey, look, I think it's worth 8 million. You think it's worth 10. How about I pay 8? And if things go well, meaning if the company grows over the next 2 years, like you say it will, then I'll pay you another $2 million. And so that's like a third way to help finance a deal. And all of those extra payments would be made by the company itself. So, you know, if you combine all of those things together, you can sometimes result in having a very, very small equity check, which, you know, we try very hard for, and it's kind of one of the primary functions from like a financing standpoint, is to have our equity check in the end on a company that's pretty safe with average customer base current revenue, have the equity check after with all that financing be maybe only 1 year's worth of profit. And so kind of the way our model works at Surge is even if you have half of your profits every year go to interest expense, which is not even close to that much, but for round numbers, let's say it's half. Well, then you're left with half a year's worth of profit that you paid 1 year's worth for. And so that's like a 50% yield. And that's the appeal to what we do, is you can kind of look at it like that. And even if the company fails to grow, you can make very high returns just from your equity check being so low relative to the profits of the company. And so financing is huge to making, you know, an investment attractive, because when you talk about, you know, returns that high, you can, as a result of it being that high, take on more risk, meaning, you know, do multiple of those deals. And if one were to fail, the others kind of more than pay for it.
You know, one of the questions I see a couple flavors of in the chat box is, what are the biggest mistakes you see people making going into small business? What I'm sure all of you probably have war stories. Maybe you could point out, what do people really need to watch out for?
The biggest one is buying a company and changing everything the first year. That is a huge mistake. That's from a buyer's perspective. You need to kind of ease into the changes that you're going to make and don't burn bridges, that's for sure.
I want to ask, there's a great question that got reposted here. So thank you for to the reposter. Who is a first-time buyer? Is it an individual in their 20s and 30s wanting to make a career in the new business, or a mid-late career professional looking for a change from the rat race? So who are you seeing as a first-time buyer? And then the follow-up to that was, do you see many first-timers regret their foray and retreat back to the corporate world from which they came?
I think what we're seeing from a franchising perspective is a lot of folks that are finished with corporate life and ready to do their own thing. Even though we do have some younger folks, and the majority of those people have the corporate experience. As far as any kind of regret, that's where we really, again, stress the due diligence in ensuring that people are buying based on fact and not emotion. And that really minimizes the risk.
Seeing buyers all over, all up and down the continuum. I see younger buyers who have, maybe they've gotten some kind of a payout from I don't know, an annuity, maybe their parents have died or whatever. And I see the older corporate guys that want to run a company themselves. They're tired of the rat race, but it's all over the map. And the regret part, I'm not seeing much of that in the deals that I'm doing.
Yeah, I would just say if it's your first time to buy something, and this also goes on to another question I saw in the chat about how do you do financial diligence. Well, there are a lot of different accounting firms, and if you're doing a small deal, you'd rather use a smaller one because the big ones charge like a ton of money primarily for their brands, even though they are better. And I come from KPMG, I work there, so I can talk trash about Big Four accounting. But anyways, to hire one of those firms, I've seen a lot of people that buy small businesses and then then they realize it doesn't make any money, and they're like, well, but the seller was showing me that it made this much money, and then they just get confused, and then they're like, well, I just didn't do my diligence. So I would say you definitely just have to do that. And if you think that it's not worth it to spend money on it, if you have to spend that money on it to do the diligence, which you can get that for like 10 grand, you can get it on the cheap ends. You definitely want to spend money on the diligence. And I would just say also, if you have somebody or even, even people on this panel, like I'm happy to, if you send me something you're looking at for free, just tell you what I think, but it'd be helpful to ask somebody who's bought businesses before, because if you don't know what you're doing and it's your first time to do it, there's, you certainly make a mistake or, get into it. I'd say the biggest mistake is people paying too much for something because they didn't know it wasn't worth very much, because it either doesn't make money or it's like a construction business, and companies that are in the construction business don't go for very much because that's like project oriented. But anyways, I would just say seek advice from somebody who's done it before and due diligence.
Gilbert, what have you seen in your franchise experience? Any mistakes of first timers?
I'll answer the question about why do people fail first. And in the area that I'm in, most people in the restaurant business in the airport environment fail for a lack of brand awareness. So the brands that you choose to bring in are important in terms of bringing in revenue. The reason, even if you have a great brand, a great location, if you fail to have proper accounting systems in place, if you don't have access to real-time data about what's going on in your business, and in my business, I tell people, ask me what's my job, and my job is to minimize theft. We have 120 cash handlers every day. If they each take $10, I'm out $1,200. If they take 100, I'm out $12,000. And so my job is basically to make sure that the money that our guests leave make it to the bank. And to me, most of my competitors in my environment fail for failing to watch the money and the product coming in and out of their business.
Good, great insight.
One more point. You must be aware of who you choose to partner with. You could have the best, but you could have the wrong financing or operating partner. And you must know how they'll respond in adverse situations, both whatever's going on in their personal life and what's going on in the business. So if you don't have complete trust and there's not complete integrity on everyone involved, you're going to fail.
Great insight. So Rebecca, any more comments or questions?
Sorry, I was so paying attention to Gilbert's comment there. I do want to add one thing. I want to support what Gilbert just said about his job is to make sure people aren't stealing money. My husband, okay, so owned his own practice until he rolled it into a private equity group. And he always joked with the other doctors he knew that also ran their own practices that there are two kinds of doctors that own their own practice, those whose staff are stealing from them and those who do not know that their staff are stealing from them. So, I mean, that says poorly, but you know, there's some level of realism there. So yes, there's a lot of controls that are necessary.
Can I add one thing that just astounds me, that people in my business, so I compete with HMS Host, that's $2.5 billion in sales, with Delaware North. None of these companies do what I think is an incredibly basic thing to do in a business that still takes in significant cash. I follow the cash to credit card sales ratios of everybody that collects cash from any of our guests. And if my standard cash collection at end of every day is 17%, and I have a bartender or a waitstaff person or a cashier in a quick service that only has 0% of cash that day, I have a real problem. And so we follow cash to credit card ratios by the hour. And so we will know who is pocketing the cash. We deal with it incredibly timely. That person may take $10 from us, but he's not going to take 100, and we dismiss them. But I can't tell you how many people in my business do not pay attention to every cash handler's cash to credit card ratio on an hour, shift by shift basis.
Okay, I'm going to ask the panel to answer one more question. We can kind of go round table. What advice would you give someone in this session who's interested in exploring Dallas small business opportunities? What recommendation would you give in terms of next steps? I know it's kind of a broad question, but even from your own perspective.
Well, I'll start and say so as I mentioned before, one thing you can just do that's quick from home is to look on those public listing websites I mentioned, like BizBuySell and BizQuest. But then second would be to talk to brokers like Nolan that have offices in Dallas. They'll most likely be ones that have businesses in Dallas, and you can look up various firms that do that. But especially if you're looking to buy one for yourself and it's a smaller deal, like $2 million or less, then you're probably going to get the most deal volume and deals you could look at by going to one of those public listing websites like BizBuySell or BizQuest, which they're free. And that's basically like the yellow pages, and people can post whatever they want on there. And like I mentioned before, though, 90% of the stuff on there is just garbage. But if you go through it and you look at a few, you can find some attractive opportunities on there. So I would just say to check that and local brokers.
Okay, Hilda, what are your thoughts? You're pretty networked into Dallas. What would you recommend people do?
You're asking me?
Oh, Hilda first.
Oh, okay.
And
You're on mute.
You're on mute.
Unmute.
Hilda's on mute.
No, she's
Got
not.
it.
Oh, good.
Slow on this. I think one thing is the word of mouth still runs really fast in Dallas. I think in terms of who's doing bad or who's doing well. So your due diligence also happens not just looking at the financial books, which you have to, but also by asking questions to the people in the same industry of where you're attracted to invest on, and see what has been the lifespan of the businesses and how they have gone up on our economic ups and downs. Obviously, I think it's easier to buy a business that has been established for many years than on a startup. The startup are always going to be more challenging because there is a lot of hope involved in the concept rather than necessary proven record. So those are my comments.
Great, thank you. Gilbert, what are your thoughts?
You asked what should people have or be successful in a business, and my comment is that you have to be passionate about what you do. I started out as an accountant, a staff accountant at the old Pete Mark Mitchell company, now KPMG. I enjoyed that, but incredibly competitive and nasty environment. Worked at a major law firm for many years, was a partner, and totally disappointed with ethics of people. And so a lot of my friends were concerned when I chose to go in the restaurant business, but I love what I do and I'm passionate about what I do. And so I think if you're not passionate about any business that you're interested in, don't do it. The second thing that I've learned is I show respect to everyone, whether it's my franchisors, my suppliers, my service people, anybody that works with me in my company. I respect them, but I trust no one. I have seen where whether it's your suppliers, your service people, your employees, everybody always has a need for money, and if you leave an opening, they will find it and take advantage of it. But so I try to be respectful to everyone, but I trust no one.
Good advice.
Yeah.
Janice, what about you? What advice would you give people?
I think one of the things when people are looking for business, a lot of times they just start looking for the business. And we take a step back and really look at the first step, which is kind of an introspective self. And my question to a lot of these people is, have you ever written a business plan on yourself? To know who you are. What are you trying to accomplish? Because if not, we find we kind of compare it to throwing darts backwards blindfolded. It just doesn't make sense. So know who you are and what you're trying to accomplish. And then from there, start making the decisions on what might be a good option, and gives you a little bit easier path to follow.
Great. And Nolan, you're a cleanup.
Well, I think that two heads are better than one when you're looking to purchase a business, and having some advice from someone who's been in the business for a while and has done the work. I've been in this 15 years and I've seen a lot. And so having that kind of experience really ups the percentage of your success. I mean, your success rate goes up significantly. I work at becoming a trusted advisor. Gilbert, sorry, but I try to be, put other people ahead of myself and try to help people accomplish what they really want to accomplish. And I've been in ministry for a long time. And as a result, I've gotten to the place where I can read people pretty well and know when they are not being straightforward with me. So I try to work with good people. I'm not, I fire clients if they're not going to be trustworthy, and if they're not going to tell me the truth, especially. So, but I give everybody the benefit of the doubt, that is for sure, and try to help them accomplish what they want to accomplish, and help them, do a little bit of pastoral counseling along the way so that they can understand what Janice was talking about. Who are they? What do they really want to do? Does this business really fit you like a suit of clothes, or is it something that you'd have to cram yourself into? So that'd be my advice.
Yeah, let me qualify. I am fortunate that, well, I tell you not to trust anyone. That means somebody coming into your life at any given moment. I have right now over 30 people that have been with me 20 years. Many of them are on their 40th anniversary with me this year. And so, trust no one. I have a very good core group of people that I have no doubt that I can trust, and they will always make the right decision when an issue comes up in the world that they're in charge of. But when it comes to hiring new cashiers or getting a new AC service repairman or a new vendor who brings me milk, you got to be careful. You my managers are instructed not to trust them, but to respect them. When the trust is earned, no doubt about it. I think that's why I have so many people that have been with me anywhere from 20 to 40 years.
Great. But, what we want to do, because we're actually at the end of our time, but we want to do two more things. One is we want to bring up a survey.
Yeah.
As we mentioned at the beginning of this session, this is really a survey, discussion, and we'd like to get input from club members and even the panelists. So you're certainly invited to attend future sessions, and we may call on you to participate of where folks will be interested in hearing more. Small business areas. So Stacy, can you bring up that survey that folks could fill out? So here are 6 areas that we're thinking there might be some interest in doing some real deep dives. If folks could pick the ones that you would be interested in attending an hour-long session in, to learn a little bit more, that would really appreciate us. We would appreciate that. And while you're doing it, I want to express our appreciation for the panelists. They were able to put this on their schedule. I think we scheduled maybe 2 months ago. So we really appreciate your time, your passion for your businesses and your profession, and your willingness to present to the HBS Club and the Harvard Club. You were friends at Harvard.
Look at these answers. It's so interesting.
You're friends of the clubs.
Everyone is interested in how to find, then participate as a passive investor in a small business. Tom. He smiles. And then interest, for sure, very strong across other areas as well. All right, this is very helpful for us, and we come up with new programs, ideas. And I wanted to say one thing to Brian's question that all the panelists answered about advice for getting involved with small businesses, finding small businesses, et cetera. One thing I will say from personal experiences, for everyone in this call who is part of the Harvard community, lean on each other. I can't tell you the number of times I have gotten wonderful advice, leads, et cetera, from someone from the Harvard community. Like I'll just bring up something to someone and chances are they know someone who can help me or they've got experience in that area. We have a fabulous, diverse, rich, deep community in the Harvard clubs in our community. So reach out to one another. I think we're a great resource for each other. And from Brian and my perspective, as we do programs and we do entrepreneurs programs, we will do our best to try to address those areas of greatest interest, bring in speakers that you should meet, like all of our panelists here today. So if you have any interest, just let us know. We want to be a resource as well. And when Brian and I, we can also figure out if there's ways to have better offline ongoing discussions. I know he set up a Slack group, but there's other things that we can look into doing so that you can always use your entrepreneur group here in the Harvard community and work together.
Great. Thanks all. Have a great end of week and weekend.
Thank you
very much.
So I think that went really well.